Good morning, everybody. Welcome to the Locke in Your Success Options Trading for Income Weekly Update for November 3rd, 2014. Before we get going, we would like to remind you that the presentation is for educational purposes only. Also, we're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. And the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. Also, we will be using hypothetical computer simulated results in the presentation, just be aware that we do the best we can to make sure those trades are represented as accurately as possible. However, there may be times when actual results may vary. If you're watching this on YouTube or some other venue, come on over to our website, check out the M3 Bearish Butterfly ROCK M21 programs, as well as our group coaching and one-on-one coaching programs. And join our mailing list, get your free report, 7 Secrets to Becoming a Successful Trader. Sign up for this weekly webinar at lockeinyoursuccess.com. All right, so let's take a look at the markets. But before I do, I just want to mention something. We are experiencing really, really bad weather up here in New Hampshire. We have some heavy winds. And where I am at the end of a lake, we are actually probably 50 to 60 miles an hour. I have stuff flying all over the deck and power going in and out. So if you happen to lose me, we may end up being cut short on the presentation, but I'll do the best I can to stay online for the whole thing. All right, so as far as the market goes, last week we were expecting the markets to rise. We were expecting about 2020 on the SPX, about 1170 on the Russell. But the reality is I was not expecting it to be this fast. This is, if you look at last week, that was the biggest up week we've had in the markets since 2011. And it's also the biggest up month we've had in the market since 2011, and that's particularly true for the Russell. So really very aggressive up move here. And realistically, the volatility wasn't that high. When this happened in 2011, we had higher volatility numbers. We had just come off the 2011 crash, which was a down move that was much more severe than what we just had. So volatility is a little bit low for this type of a move. And this can give market neutral strategies a little bit of trouble. And you'll see that, we are having some problems with some of the trades. So the question is, where do we go from here? I was kind of expecting when we got to this point that the NASDAQ would have been at this 4,100 level. We had the gap up on Friday, and we did break out higher, which is a little bit of a concern. And also on the Dow, I was expecting the Dow to top out a little over 17.3, well, 17.390. It's a little over the previous highs. It's not terribly high. In other words, it's not really a conclusive breakout, but it is a breakout. SPX is essentially going to be exactly where we thought it was going to be, which is at about 21. They're at about 2020. So 2 indices did what we expected. 2 of them are stronger than expected. One of the things that we have, when we do our M21 calculations, we have exceeded our the 60-day up move we've ever experienced. We've experienced in the NDX for the last 2 years. We actually exceeded that significantly. We're 15 points from that on the SPX. We are there on the Dow, and we're still about 40 points from a maximum move on the Russell. So on the Russell, if we look at the Russell, we're just basically experiencing what we call an average up move. Most of these up moves here in the Russell have been about 130 points, and that's where we are pretty much right now. So that's as expected, except this has been actually faster than we've seen in a very, very long time. So, interesting markets, very, very bullish movement here. Where we go from here, I'm going to watch the NASDAQ. If the NASDAQ, I would expect the NASDAQ, it's possibly going to test its highs today, maybe be up a little bit early, but more than likely during the week it's going to come back and try and test this 4,100 level. If we bounce off of that, we'll probably have an intraday bounce, but if we have a significant bounce off of that, Russell's probably going to break higher and the SPX is probably going to break out. I would, however, if we crash under this level, then I'd expect everything to have a reasonably large pullback. I'm thinking we're most likely to get at least a 30-point pullback in the Russell, probably closer to 60 plus points. We'll have to wait and see. It's going to, like I said, it depends on what the participants do at this point. We're kind of at a decision point in a couple of the indices, and just having the NASDAQ breakout, it hasn't convinced me yet. We shall see. All right, so if we just kind of shoot off to the trades here, actually, before we see if there's any questions regarding, yeah, there was something in the market. Let me take a look here at what we got going on. All right, regarding the December bearish butterfly, as this was the biggest 15-day move in the Russell in points, not percentage, right, ever. And that's an interesting, Jens. I didn't look at the largest 15-day move in the Russell ever. That's interesting to note. And like I said, I haven't confirmed this, but somebody's telling me this is the largest 15-day point move in the Russell, not percentage. Any special tricks or just follow the guidelines as bearish butterfly can be 50% back. Yeah, so with the bearish butterfly, at this point the market move's already happened. There are tips to extend the range of a bearish butterfly when the move is happening. As of right now, it's kind of already happened. I would probably be just following the guidelines at this point. I'm assuming you're scaled in a couple, at least 2/3. I think I got scaled in 3/3 on the sample trade. We'll take a look at that. But yeah, there are ways to extend the range of the bearish butterfly, but it's like I said, it's already happened. So I don't know that I'd be extending it too much now. If starting a bearish butterfly later than 56 days in a bullish market, would you have more success entering what the position should be if you start on a schedule, or is it better to start off fresh? So this is like a question, if you're going to do a bearish butterfly, and say you were thinking of doing it 56 days to expiration, but you never put it on. But now the market's been up a significant amount of money. Should you just start it as if you were starting a new one with a single butterfly 20 points under the money, or should you just start it, or should you just go, where would I be had I started at 56 days to expiration? In this case here, I mean, if the Russell was at 1210, in other words, we look at the M21 stuff, we look at maximum runs in the Russell, and we say the most point values that Russell's ever gone up in a 60-day period is 170. We're only up 130. We have a situation in the NASDAQ where we may break higher. It's indicating that the bulls may just actually try and do that. So that being the case, I would say, you know what, I'd want to plan for the Russell going to 1210. And entering 3/3 here and the Russell going at 1210 is going to be a hard go of it. I'd be willing to enter maybe 2/3, but realistically I'd probably just go for the 1/3 and just do a regular entry for December, and just if the market backs off, you're going to be doing very well anyway. Obviously, if the market backs off, you're better off going in 3/3 where you would be. But realistically, with the possibility of looking at maybe another 40 points, I'd probably rather be in 1/3 and just do a 1/3 entry. Okay, my maximum 60-day movement, high to low in the past 2 years, was just reset to 145 points. Yeah, we may have missed it, but I'm also aware that it was 170 points 2 months ago. So, and this being the most aggressive move we actually have seen since 2011, I would probably hold it at 170 points now. So I would expand. So I would tend to expand that further. I don't think we're going to go to 1211 because the Nasdaq's already extended over its run. The Dow is basically, like I said, there, and the SPX is there within 15 points. So that gives us another 15 on the Russell, which holds your 1185 number pretty good. But like I said, if I'm going to bet the farm on it, I would probably allow to that 170-point move in case the market's crazy. With the elections tomorrow, I don't I don't think the elections are going to really mean anything tomorrow. So they're probably going to get the same old Democrats going to win most of the seats, and you get the same old stuff going forward. So if the Republicans win, I don't think that's going to be a big deal in the markets. So I tend to discount news anyway. So yeah, I wouldn't alter anything for the elections, and I rolled twice, and you're 2/3 in the December Bearish Butterfly now. Yeah, so if you roll twice and you're 2/3 in it, then yeah, that's probably not a bad position to be in here. If it continues to go up, I would just add my last third and let it run. I mean, the markets are high enough where there's a good chance they're going to turn around relatively quickly. Just you hold to your loss numbers when we enter a trade, such as a bearish butterfly or whatever. We enter with the knowledge that we're willing to risk, that maximum loss number. And I wouldn't give you getting too on top of the market right now because, with the bearish butterfly, I probably tend to hang behind it because we are due for the market to come back. So I think you're probably doing fine with that. All right, so let's look at what we've got with our positions here. Now that those questions are answered, we got a lot of position movements this week because of the large moves. As far as the V condor for November goes, all I did this week is on Thursday I sold off. I'm sorry, on Tuesday. If we come back to Monday, I'll just do a real quick synopsis here. On Monday we had 14 short 1130s, and if you look at our graph, we look like this. So when we had that big move up on Tuesday, what I did is I just sold off this other 1130. So if we move to Tuesday, then I just sold off this other 1130 here, and this is what our analyzed graph looked like there. And then on Thursday, I just pulled out of the straddle. Now, I did that. I mean, I was negative theta at the time, and I'm negative about basically flat delta. The market's just kind of, who knows where it's going. Now, if I had not pulled out of the straddle, like if we go, I think here, I think I still have it on. Right, so I'm sitting in this position here. If I don't pull out of the straddle here, I may end up dropping down. If I don't pull out of the straddle and we grind all the way up into the, up into this 1200 area or so, I'd probably be better off because I may actually be able to make some money. So it's just kind of a judgment call here. Is, do we think the market's going to maybe settle at the top, which it usually does, or have some sort of a mild pullback, or is it going to continue to grind all the way up into the 1210 or 1211 area? I took the judgment call of, I'm just going to pull the straddle out and take a small loss on this and see if we can just expire it. So if I move forward until I pull the straddle off, we're sitting in a position like this. And should the market be reasonable for a week, then we should be able to expire this thing here at a small loss in the area of about a $300 loss. So that's really good. I'm asking if I can share my screen with my analysis graph. Yeah, I do. I am sharing it right now with the analysis graph, so I'm not sure if there's an issue there. I see other people do see the analysis graph. All right, so this is showing me about a $300 loss for the month. Not an issue. It's just one of those months that went bad. So, and you're going to see the V condors do not, or any condor strategy really does not do very well in a market like this unless you happen to get lucky and you're taking on excessive risk, which is what some people do, and it's a recipe for disaster later on, but some people do trade that way. All right, so that is essentially the November V condor. I mean, just looking at the T-log, you can see I sold this off on Tuesday. I sold off the straddle on Thursday, and we're going to be taking a bit of a loss there. All right, so coming into our next trade, we have our November M3 trade, which also was fairly active for the week. Let me just go to Monday morning, show you where we were. Or actually, I don't think I did anything to this until... So on the 27th, we sold 1070, 1010 verticals. So if we come up into here to the end of the day, all right, we just moved 10 of these up here, and that was just to make a delta, a vega and delta correction on the position. Here's what the position looked like at the end of Monday. And if we go to Tuesday, I actually did a butterfly roll up. I rolled this butterfly at 1160 all the way up to 1100. So if we move forward, you'll see that this is going to scoot up to 1100. Essentially, I put my long strike where just slightly above where the price was at the time, and I didn't move, and I just rolled everything up. I didn't move the call, and this is what the position would look like after Tuesday. Wednesday, of course, we had a bit of a very small retracement, and nothing was needed here. Thursday, we were back up again, and I did 5. I sold 5 of these 1100, 1120 verticals just to get a minor delta correction here because we were slightly over our maximum delta. So our position looks like this, all looking fine. And then on Friday, we actually did another roll-up. We took our 1100s all the way to 1130, so we rolled up another 30 points. So as of Friday, we're here with the 1130 butterflies. We have 5 short at, we moved 5 of the shorts up to 1140, 5 to 1150. The end of the day, we're looking at minus 56 delta, and our vega is good, our theta is good. This is still a really nice-looking, healthy position. Of course, if the market slows and pulls back this week, it would be fairly good for us. Being this close to expiration, as long as we don't get a large volatility increase with whatever pullback we happen to get, then we should be up a decent amount by the end of the week. So that's what we're hoping for. Of course, if it continues up, we will continue to chase it up. But that's pretty much where we stand as far as the M3 goes. I'll just show the T-log here so you guys can take a look at that a little bit later. And we'll move on to the November Bearish Butterfly, which did not work out so well. So let's see on Monday. However, it's still hanging in there. So let's go to, and I'm going a little quickly, you guys, because I just have a lot of trades to cover, and of course I got to be off here in about 20 minutes. So November Bearish Butterfly, we were in this position at 1090 with on Monday. We were just 1/3 entered. We had the big pullback, and then we had the bounce. Now the reality is, with a position like this, when you get the pullback like that and you get a bounce, we always talk about in the markets, when the market is coming down, this is like a springboard. So when it reverses, boom, you got to watch. You got to watch that. So in this type of a situation, a lot of times you'll take a bearish butterfly and switch it into an M3 trade. Pretty much at this point. So at this point, you would you'd buy your call. You start hedging this off. Within the Bearish Butterfly program, though, we don't do that. So this is what we look like here as of Monday. And Tuesday, let's see, Tuesday was our first move. So we got a 30-point plus move on Tuesday, which is a very, very aggressive move. We have we've got this drawn down to about 2100, sold off the 1090 butterfly, bought the 1110, bought the 1130. So now I'm 2/3 entered and in a position that looks like this. On Wednesday, we didn't have to do anything, and on Thursday, we didn't have to do anything. Now, Thursday, arguably, I could have done something. Thursday, 1150 is technically my add point. One of the things with a bearish butterfly, especially when the markets get volatile, is slower is better, right? I have people who, or I have students sometimes who are newer who say, hey, even intraday, they're like, hey, I hit an add point intraday, so I tried to force into it. And it's like there's no need to do that. The thing with a bearish butterfly is you're not in a hurry when you hit your add points, your adjustment points, particularly if you're not fully scaled in. The reality is if the market came back tomorrow or stayed here tomorrow, I could add this in tomorrow. If the market came back tomorrow, I would have been better had I added it in, but if I didn't add it in, it's not a big deal. The reality is I'd just be up money, so everything's fine there. And really, if the market takes off to the upside the following day, then you're just going to get into your last third a little bit cheaper, and your drawdowns are going to be a little slower. So slower is better. This goes both for the November and the December. Now that we're pushed into expiration guidelines, we'll probably be a little bit faster to react because as of Friday we're into expiration guidelines. But as of right here, I was just barely touching our next add point, so I decided to leave it alone. Then, of course, Friday we got another large move, a 20-point up move. And what we did is we rolled out of the 10-10 butterflies. We added 1150s, we added 1170s, and then because we were in expiration guidelines, we decided to cut our delta back down a little bit. Now we're just barely getting to expiration guidelines, so I cut my delta. I definitely wanted it under minus 500. Normally we cut it down to minus 250, but like I said, that gets gradually more aggressive as we get closer to expiration. I cut it back to about under 400 for the weekend, and this is what the position did. I just sold off 5 of these 1130 butterflies to Tuso, and here's what the position looks like now. So if we do get the retracement we expect this week, this may be back to break even by the end of the week. If we don't, or if we continue an aggressive up move, then we may very well take a loss on this. But it's been a good year for the trade in general, and they happen. Losses come occasionally, so no big deal there. Okay, so that is the bearish butterfly for November, right? And I have a comment, right? Not easy to handle this mentally from plus 3,000 to minus 10,000. Hey, that's trading. If you're a bearish butterfly trader and you're used to that, then you get that all the time. The system, the process, long term is very, very profitable system, and the profit and loss in a bearish butterfly varies a lot. And when you enter the position, if you're not prepared to take that maximum loss without it affecting you mentally every single time, even if you're up money in the position at some point, then you're trading too large. So you need to bring your size down, and or you're either trading too large, or you're putting too much emphasis on having to win the position and not looking at the long term. You're putting too much emphasis on short term. When you see a trade go up 3,000 and then it eventually loses, that is normal, and you can't get mentally all freaked out over that. That's just something that's completely normal, and it's just part of trading. And that's, if you're having trouble, that's why you're having trouble. So just need to keep that in mind. Right, yeah, you started the bearish butterfly without all the wins through the year. Yep, and again, that's just part of the thing. Any given year in a bearish butterfly, we expect 9 wins, 3 losses. We've had 10 wins. I'm sorry, I think 9 wins, 1 loss earlier in the year. We may or may not lose November. I don't know. We may or may not lose December. But if we lost November, December, we would have taken our 3 losses, 9 wins. That's a normal year. The only thing not normal about this year is we haven't been taking our bigger wins. We've only had smaller wins this year. So we'll have to see how that works out. But that's completely normal. And yeah, and I'm not beating anybody up if they feel bad because they were up 3,000 and now they're down 10, especially if they they haven't participated in the wins earlier in the year. But again, I mean, that's the difference between a long-term profitable trader and somebody who's going to start jumping systems all over the place because hey, it didn't happen to work out this time, so now oh, this is no good, I'm just going to move on. Long time profitability, it's just something. If you're going to trade a bearish butterfly, that's something you're going to get used to. If you don't like the drawdowns, An M3 type of trade is very much more consistent, flat in a profit and loss standpoint. M3 trades are just very, they draw down sometimes, but it's generally not that fast. It's a very slow-moving trade. This year is particularly into expiration. These bearish butterflies are very fast-moving trades. I've had these trades down $13,000, and because you're taking on such a high delta risk, boom, they're a profitable profit target in the next day, sometimes 2 days. You'll get a 40-point move down, and it'll be back. So it's just the nature of the beast. And trying to count your chickens before they hatch during the trade usually doesn't benefit the way you trade very well. So just some thoughts there. Would today be a good time to enter? Yeah. I mean, would today be a good day to enter December bearish butterfly? And I would say, yeah, especially if the market's up today. Certainly if it's over that. If we're still 49 days from expiration, so you still have enough time where it should come down. Keeping in mind, though, right? Keeping in mind that December is usually a bullish month. Usually the market's up in December. So it's very, very likely that, because we've been up so far, it's very likely we're going to get some sort of a pullback, 30, 60 points, maybe a little bit more. But keeping in mind that December is usually a bullish month, we're probably going to be up in December, probably even higher than we are now. Maybe, who knows, maybe we'll even break out and go higher. But so you need to keep that in mind. So you're going to manage a bearish butterfly a little bit like, I'm going to put this bearish butterfly on, the market's going to come back, I'm going to make my profits. December is usually fairly bullish. Now that I've reset, maybe do some sort of a delta hedging technique to the upside, because we're probably going to push higher so you don't draw back down. So like a bearish butterfly into an M3 is a nice trade for December, likely. So let's just move forward here before we run out of time. And I'm going to have to put some questions in the back burner for now. So November rock trade. A lot of stuff here too. If you look at Monday, prior to any adjustments, we have that's a November bearish butterfly. Let's go into November rock. We have a rock started as an M3. We are in very similar position than what we were in our regular M3 trade. Here's what that looks like. On Tuesday, we had the large up move. I'm sorry, on Monday, we did nothing, apparently. I have my notes. I didn't do anything on Monday. This is what it looked like on Monday. On Tuesday, after the large move, we did the roll-up from 1070 to 1100. Now, normally, if I'm in a M3 trade within the rock system and I outrun my trade, normally I'm going to go into a rock trade. But that I did the entry test, and the entry test failed. Therefore, it kept me in my M3 trade. So I just rolled up the trade, just like we did in the other position, in the regular M3 position. And then if we go to Thursday, I did the same 5 verticals, because this is essentially the same position as the M3 trade, except we're not up money because we started later. We started 30 days to expiration, right? So this is essentially the same trade as the M3 trade. And then on Friday, when we got the big move, it was roll-up time again, right? So I exceeded my points. So what I did is I sold off the M3 position I had on, and I went into a normal rock configuration here, and I did 10 1150 butterflies. I could only get 3 in and keep my delta around minus 180. So when I did 3 of these call butterflies up here at 1190, and that put us in a position that looks like this. So we're off and running in a rock position. This works very well. If you're having an M3 and you're having a year where you're consistently getting outrun to the upside of the market with an M3, like we were in 2013, it works very well to come into this now that the market's already overextended and we're getting close to expiration. And then, as long as the market stays under 1210, we should be okay here, and the moves are relatively easy. So this is what we have for the rock position. T-log, I'll just quickly show that. and then I got to move on to our December positions. Let's see, December V Condor. So let me just go quickly, December V Condor. This is about a max loss trade at this point. So it's just too much of a move for it. These typically do very well in upturning markets. It's just that the move is just too aggressive here. So what we did is on Tuesday, let's go back to Tuesday before any adjustments. As of Tuesday, we're sitting here in our regular V Condor. Our maximum delta is just plain too high, right? So we buy back a couple, one of these 11, one or two. I don't remember if it was one or two. I think it was two. Actually, we ended up buying back 4, right? 15 and 5. Yeah, 4 of these to get us down to. The reason we did 4 instead of 2, right? So we had to do 2 to straighten out our. Oh, sorry. -2. We had to do 2 to straighten out our delta, but then we have also in V Condor land we have delta theta ratio issues, and we don't like our delta higher than our theta, so I ended up doing 4 to bring our delta theta ratio under 1-to-1. So we ended up doing that to bring our delta theta ratio under 1-to-1. And then if we go into V Condor, that's it. That's all I wrote down. But I think I had a roll up. So if you go to Thursday, this is what we have for a position on Thursday. And what I did is I did a roll up on Thursday. I didn't put this on my notes. What we did is we took the position from, let me go back a half hour. We took the position from this, right, which is pretty much a dead position. I'm having delta theta ratio issues. If I try to fix my delta theta ratio issues, then I have a negative theta thing going on. So the only thing you can do here at this point is to roll these back and roll the backside up. So that's essentially what we did at the end of the day. We rolled this to 1220 with our shorts. We took and we added more shorts back in. We rolled up our bottom side all the way to 1040. We moved our straddle up to 1120 to give us a position that looks like this. And then the 17-point up move on Friday essentially took us to approximately our maximum loss level. So we could call this a loss. Very well, this is, I'm okay here. I bought this back to bring my delta down, but essentially we get any kind of an up move today, close higher, unless we get some sort of a strange raise in our T+0 line, which may or may not happen. Then this is probably going to be max lost out. If the market backs off, or if it stays today, we may be able to. It may be salvageable, but we'll have to wait and see. This is kind of borderline. If we come to, and that's what we had for that, and I'll just show the T-log quickly there. I have to move on to. I have a request for the December M3, so they may be in a hurry. So let me just do a December M3. Here is what we have going on in the December M3 trade. Let's go back to Monday. Alls we did, this is what we look like on Monday, December M3. Nice flat, no problem here. Alls we did on the December M3 is we were at the 1080 shorts. On Thursday, we rolled up from the 1080 shorts all the way up to 1110. So I'm sitting here and 1110 butterflies. I still heavy in the butterflies because I can be. The volatility levels are still relatively high. It allows me to have 14 butterflies on the one call. This is what we look like right now in the December M3 position. So everything's looking fine there. We have a December, what else do we have on? Oh, the last thing we have on is December Bearish Butterfly. So December Bearish Butterfly as of Monday. looks like here. So here's what we look like Monday on the December bearish butterfly. We're just in single 1090 butterflies. On Tuesday, we had to add the 1110, so we didn't have to actually do the roll on the bearish butterfly like we did in November because we're in December and our Greeks are a little bit different. So we just ended up adding in the 1100s on Tuesday, and then on Friday we did a roll and add. So then on Friday we pulled off those lower ones at 1090, brought them all the way up to 1150, and then we added the 1170s. I think we did a double. I think we actually ended up doing a double roll here because the market went up so far. So this is down about 6,000. That's really not much of an issue here. This is kind of a normal situation, and it's actually kind of a situation that we kind of want. I mean, assuming the market is somewhat reasonable and actually spends some time in this range. Again, this will be up money relatively quickly. I don't usually like to be in 3/3 this early in the trade. Realistically, if I'm really concerned about an up move and I do get my retracement, sometimes I'll drop my size back down and let the market, if I think the market's going to explode up again, then scale back in again. But anyway, we're just going to follow the guidelines and stay here. 90% of the time it works out fine. So anyway, that's what we look like in December, and the jury's still out on that one. So we definitely took, especially the V Condor took a bit of a beating this week. The rest of the trades aren't doing too badly. I mean, well, the November bearish butterfly, obviously, because like I said, we get the strongest week we've had in years from our point move. And like I said, one of you guys said the biggest point move in 15 days we've ever seen. So that's not exactly bearish, and it would make sense that the bearish butterfly is having a little bit of an issue there. All right, so what's the normal win-loss percentage on the M3 if you have successfully traded the M3 and the SPX? The M3 trade too, I like the bearish butterfly, I usually call it a 9-win, 3-loss type of a ratio. 10% wins, 10% loss. If you average those numbers out, and that's not the way the trade actually comes in. Like if you do the numbers and you say I won 9 at 10%, I lost 3 at 10%. I think that comes out to around 60% or so, which is on average a lot of times what you're going to get in an M3 type of a strategy. The reality is the profits come in plus 5%, plus 7%, plus 3%, plus 10%, and then a lot of times the losses are like 5% or 3%. Every once in a while you'll get a 10% one, but usually the numbers work out about that way. So, but that's typically what I expect on that. T-log for the bearish butterfly. I think I did the T-log on all the bearish butterflies. But here's the T-log on the December bearish butterfly. And here's the T-log on the November bearish butterfly. And would there have been some way to learn the last week when you made your M3 roll-up adjustments to? I'm not understanding that question. Would there have been some way to learn last week when you made your M3 roll-up to a short? I guess I don't understand that question. I rolled up the M3 because I can tell you why I rolled it up. I mean, of course, I don't know what month you're talking about, but I rolled it up because we were 10 points past the long strike. And typically when you're 10 points past the long strike, at least for more than a day, then you're going to do that normal roll-up. All right, so yes, tough markets. Look forward to less volatility. You know what? I love these markets. I love the volatility back and forth. It's just so much more exciting. You get to get in there. You get to have some challenges. There's nothing like pulling out a bearish butterfly that's 10 grand under, or taking this M3 trade and working the market back and forth, making it work out. Even if it's a break even or a small loss, I just get a lot of enjoyment out of the trading. So I'm really enjoying these markets. I love the volatility, and I love like 2008. It's fantastic. Okay, on my December M3, I rolled the 1130 short strike to, oh, you rolled to the 1130 short strike in December. So let's take a look at December M3. Right, so you're all the way up to the 1130s. So if you're at the 1130s, you may be experiencing a problem keeping your gamma flat. Like a lot of times when I roll up, if I was going to roll up today, if this is Friday and I want to do a roll up on Friday, I'd only roll, I usually put my short strikes 10 points over, so I'd probably only roll, I put my long strikes at 1180, which puts my short strikes at 1130, which is actually probably fine. So if you're at 1130, then I would say that yeah, you're fine. Sometimes if you go too close, like if I went to 1140, for example, I might have to cut back down to 10. This might not work out because the volatility is still too high. But if I went to 1140, right, I might have, whoops, pretty nice if I took out all of these. No, yeah, you don't get it. But a lot of times if you roll up too much, you're going to have a sag in the T+0 line. So if I kept my 14 butterflies, I'd probably have that. 28 plus 14. If I roll up too close, a lot of times I'll get a sag in my T+0 line that I may not want. So plus I'm not literally, plus if I'm way overextended in the markets and I'm expecting some sort of a 60-point pullback, I might not want to go this high because then it just kind of sets me up for rolling back. I think 1130 is fine though. I don't have a problem with 1130. I just happen to be at 1120, and again, that's it's fine there as well. Right, but your profit and loss is down 1,300. Yeah, that's a possibility, and depending on how well you're executing and stuff. One of the things about execution is it takes an art to learn. I mean, you can't come in here and just expect to, without having a ton of practice with execution, you can't come in here and expect to do roll butterflies efficiently right off the bat. I mean, it takes practice. It takes a little bit of realizing what's going on as you're rolling and knowing how to price things and knowing what's good values, what's not good values, and knowing timing of when to roll these. And over time, a lot of times you'll actually start to making money. A lot of the time. I mean, sometimes you're forced to make this adjustment, and you got to make it, and you're going to take this execution hit on the roll. That happens at times. Other times, you have good opportunities to roll, and you can actually make money on the rolls. I mean, if you look at my, one of the things I have, my live M3 this month is up more money than it would have been had I, just punched it into option view. So it's doing well because we had some times during the day where we had some decent rolls, except for the day on Friday. Friday I got beat up with execution, but a lot of days you make execution, it averages out. So it should be good. Okay. In the M3, 5 days, December 1150, flat T plus lira line. Oh yeah, okay, yeah. So you're in an 1150 M3. That's fine. I mean, that's rolled up a little closer than I would be. But if your T plus 0 line is flat and you have enough downside protection, then fine. Yep. I'd probably be back a little bit more than that, but just have to watch the downside. Obviously, if the market stays here or grinds higher, that's 1150 is a pretty good position. It's just not the best if the market comes down a lot. And yeah, I mean, execution. Part of it might be expectations within newer traders have certain expectations. The reality is, if you were a doctor, a lawyer, a surgeon, an auto mechanic, or whatever, I mean, you can't read a book and buy some program online and no matter how good the program is, and just go in there and perform surgery. You need to spend years. I mean, there's an art to surgery. There's an art to repairing cars. There's an art to all kinds of things, to anything you do well. And trading is just the same thing. I mean, it's 10,000 hours to master a profession. It's 10,000 hours to master trading. That's 5 years, 40 hours a week. You can put those times. You got to put that time in, and you'll learn execution, but it takes time. The good thing about the M3 program is you can stay in the market, you can follow the instructions, you can do fairly well. Most people do, a large majority of students do excellent with the M3 just the way it is, even though they're not at that level and they don't have that time in yet, because something like this drastically increases your rate of learning. On the flip side, there still is a rate of learning, and you need to go through that. So, I mean, you need to expect to take a while for you to learn everything and completely understand everything. And one-on-one mentoring is probably the most effective way to most rapidly increase your skill level. Group mentoring helps a lot also, and of course these free webinars and the free information I have out should help a lot also. But you do have to put time in the seat. You have to put time in the seat. You have to practice, and practice correctly, and eventually you'll get it. So. Yeah, right. Yeah, if you want to make sure you're pursuing the best execution techniques, the best thing to do is probably actually spend some one time with me. Or if you join the group mentoring, then you can go back through the archives, and we have sessions that we've done with that deal with execution, and you can just go through it. We've probably done 3 or 4, I would imagine, sessions on execution. If you go back through that, you can do that, and that's going to help you as well. So either one of those is a good strategy. And yeah, Ed says 9 years training. 9 years training in surgery, right? And Ed's a fantastic surgeon, and I hope he's turning into a great trader. So you're right. Anything you're going to make this kind of money at and have this kind of opportunity, and it's going to take some time. It's going to take some training. So and some patience, putting time in the seat and doing it. And the good thing is you're on a path now where and the type of training is actually very important as also. I mean, you don't want to be jumping around from trading system to trading system, doing something different every week, because every time you start something, you make a major shift in your trading, then you're going to basically start all over again. I mean, there's going to be some aspects of the old thing, but it's like, going from being a brain surgeon to a plastic surgeon. I mean, you have a lot of skills from surgery either way, but they're 2 very different things. And if you start jumping around back and forth, then you're just, hey, you're just not going to make progress. So you need to decide that this is the type of trade I'm going to do, stick to it, and make the progress, and you're doing the right thing by doing that, right? And Ed said, hey, I trade only the M3, and that's good, and that's really where you should start. You should start with the M3, and like I said, look at it as an exercise of not losing money, being able to be in the market, and keeping your position managed and safe. And from there, you can gradually turn it into something that's very, very profitable. But it does take practice. It's not something you can just jump into for most people anyway. But over time, people do well if they stick with it. So that's great. So, well, thank you for the great comments on the M3, right? Everybody's telling me how much they've learned. So yes, the learning be accelerated backtesting. Yes, you should always be backtesting. You should be backtesting properly. It's beneficial for everybody to do a backtesting course. I'll probably maybe come out with maybe a backtesting course that maybe is going to be cheap that you guys can buy. I'll put it up on the internet or something. That's something I've been meaning to do, and I think I should do that. I'll put it in my plans to do some sort of backtesting course so you can properly backtest so that you get results. And yes, don't forget I have a 10 o'clock session coming up, and it starts in 9 minutes. So I have to leave you guys. So thank you for staying with me, and we'll talk to you next week.